Hi and welcome to the Trading Bell. Glad that you have joined us. It's the season of the half years. And of course, the Lion is here. We have KCB Group and Kimathi is here to help us unpack a bit of the numbers and check on the progress with their strategy. Are they still on track? Let's get straight to the conversation. Lawrence, welcome to the show.
Thank you very much.
Yes, it's good to see you.
Thank you.
And it's been some time, so it's
good
to have you here.
Yes.
Let's first of all appreciate that you have reported some good numbers. We have noticed the 8% profit growth to 32.3 billion. And I just wanted to ask you, what do you feel about the numbers first? And would you comment whether you're still on track?
So as you say, the numbers are good. I mean, 32.3 billion net earnings is not a number to be sad about.
Absolutely.
Yeah. Especially when you've demonstrated growth, and we did have a very good year in 2024. So you're growing off a fairly good base.
Yeah.
There are aspects of the numbers that make me happy.
Yeah.
There are aspects of the numbers that don't.
Okay.
Yeah. So when I look at our top line performance, I think we can push to do better.
Okay.
So the top line total income grew about 4% thereabouts. And that gave us a very small positive jaw when I look at income growth versus cost growth.
Yeah.
Is about 2%.
Okay.
Yeah. So I would want to see a lot more happening on the top line. The top line is a combination of getting the right level of yield from the loans or investments we do in government paper. Yeah. Saving on interest expense, and that's a part that is not coming in as quickly as we would want it to do.
Okay.
And then also the volumes, growing your balance sheet so that you're lending more, and that translates into your top line.
Excellent. I would like you to give some color to the divergence, because I noticed this net profit 8% and gross profit a bit down to 6%. Maybe give some context on that so that at least our viewers could understand.
Yeah. So that's driven by what we call the effective tax rate.
Yeah.
The corporate tax rate in Kenya is 30%.
Yeah.
Yeah. If you're a good tax planner, you invest your money in revenue streams that do not attract a tax.
Okay.
For example, infrastructure bonds.
Yes.
Then it means that revenue you've made streams all the way down to your net earnings.
Yeah.
So your effective tax rate then goes below the 30.
Okay.
That's why you'd see at gross, your growth rate is slightly lower than what you're getting at your net.
Okay.
Yes.
Thank you for that. And let's just go a bit to the context first. At the beginning, and I had your chairperson as well speak on it, the CEO as well, and you as well alluded to some of it. There's been factors that have really affected the numbers in your own way. What's your biggest when it comes to the macros? What are you observing?
So the biggest one I'll say is the speed at which we are having to reprice the loans in Kenya. Okay. Yeah. Okay. Under the current risk-based pricing, which is approved by the regulator, there are very many parameters that go into computing what your lending rate would be. Yeah. One of the big elements in there is the cost of funds. Yeah. Yeah. So when you've taken long-dated deposits. For instance, you come to me last year. Yeah. One, you're being opportunistic as a customer. Yeah. But secondly, I'm also looking at it from the bank to get certainty. I give you tell me I've got 10 billion shillings I want to deposit. You tell me because it's 10 billion, you have to give me top price for this. Yeah. And I want to keep it for a year. I say that's fine. I'll give you 15%. Yeah. For a year. Come January, the rates start going down very quickly. Yeah. The rates are going down, but I still have your 10 billion at 15. It's still in my books. I'm still paying you. Yeah. I'm not repricing you. Yeah. So when I compute what my actual risk-based pricing should be, it should not be what I am now having to lend out. But because of the pressure, first public They're saying, you guys, the rates are going down. You're not reducing. Your banks are just greedy.
Yeah.
So we have to, we are being judged in the court of public opinion.
Yeah.
So of course, because we do business in this in the community, we are having to take some of those decisions that are having an impact on our what we call NIMs, net interest margin.
Yeah.
So that's the big.
You've mentioned something about the subsidiaries, and last year during your full year results, you were quite bullish, especially about Tanzania, Rwanda, Uganda, even DRC, though we have seen that crisis that you've spoken about. And I wanted to ask you, looking at these subsidiaries, what would be your overall comment on it? But specifically, I'm also interested to know about the Ethiopia entry and how this is going.
Yeah. So maybe let me start with Ethiopia.
Start with that.
So Ethiopia, we are watching the developments. We have made several visits to Ethiopia. We've had meetings with the regulator.
Yeah.
We've had meetings with a number of banks.
Yeah.
Just to try and gauge strategic fit, culture fit. But we haven't gotten to the final decision yet.
Okay.
So that is still under development. And as soon as we get to that point, we, as usual, we'll make it known. Yeah.
Yes. Yeah.
In terms of the other subsidiaries, yes, we were bullish. We believe those three. Take TMB out. TMB does fire quite well. There's a lot of growth that has come out of TMB. But looking at Tanzania, Uganda, and BPR, which is our Rwanda bank, we believe that they can bring a lot more. Yeah. So Tanzania and Uganda are on track. They're on track. Started off a bit jittery, a bit wobbly rather. But I can say those are on track. Obviously, we've got to keep monitoring, putting the pressure, and ensuring that execution is being done.
Okay.
Rwanda BPR is slightly behind.
Okay.
Various factors. First, they had a very slow start to the year. Very, very slow start.
Yeah.
So trying to catch up, having lost like 2 months.
Yeah.
With the ambition that we had for them.
Yeah.
Is proving a bit of a stretch. But we're still working on it.
Okay.
When you compare their performance year on year, it's fantastic.
Okay.
But because we were bullish, we believe that they can do more.
Yeah.
We believe they can be Bank 1.5.
Yeah.
Because that's what we always say.
Yeah.
Because Bank of Kigali is too big. It's very big compared to the rest.
Okay.
That's why we say it's not going to be bank number one.
Yes,
it's going to be 1.5. We are still pushing, and we believe that the strategy, if they don't pan out fully this year, certainly for next year, they should be able to deliver.
What's your exposure in Burundi? You had predicted hyperinflation.
So Burundi is from all the banking subsidiaries, it's the smallest of all our banking subs. Yes, we had predicted. In fact, we were surprised that it went into hyperinflation a lot later than we thought it would go. Okay. But we have to wait for it to be for the name to be published in the global list of hyperinflationary countries. Finally, it got in there. We had started the simulation work of accounting under hyperinflationary conditions, which means you have to rebase your assets and your liabilities on an index, and then it throws either gain or loss on monetary or on your monetary assets. So that work is being done. Picking from the experience of South Sudan and the size of South Sudan versus the size of Burundi, we don't expect the impact to be significant because South Sudan is bigger than Burundi, and they went into hyperinflation last year. So we don't expect the impact to be that big. But what's happening on the ground is what is worrying.
Okay.
Our colleagues are telling us citizens are actually queuing in the petrol stations for up to 2 weeks. You leave your car in a queue in a gas station.
2 weeks?
Yes. They are going into elections, I think, this month.
Yeah.
They're going into elections this month. Yes. Yeah. Going into elections this month. So that's more the worry. When things start grinding to a halt, then it becomes a bigger issue.
Absolutely.
Yeah.
Hey, let me let you breathe first and let's talk some good news, because today, the largest payout in history, we are talking about the announcement on the interim and first ever special dividend. That was about 13 billion. Just give some color, especially, and be specific to any shareholder. What are they going to get?
They will get 4 shillings per share.
That's good.
Yeah. It is the highest payout we've done, and for 2 reasons. You remember when we did our full year results, our final dividend was deemed to be rather.
Could have done better. There was a lot of that. Could have been more.
All the words were used. So yeah. Yes. But we explained why we did that. Okay. We had the buyout of the minorities in TMB hanging over our heads, because the 2 years that we had agreed to stick together had expired. So just looking at the cash flow, we thought, let's be cautious and not put the bank at risk. We are a lot more clearer on which direction we'll go now with those minorities. Hence why, and the bank has performed well for the first half of the year. So the 2 shillings interim. Yeah. And then we managed to also complete the sale of NBK. And, that brings in some additional cash. Okay. And we said, let's give back 2 shillings of that to the shareholders, totaling to 4. Yeah. So that's what we're going to be paying.
Now to some of the news now, the NPA ratio and sector drivers, talking about now your credit quality and risk. So I want to give you a flowers because it has improved now. We're seeing 18.7% from 19.2 last I checked with the other results. So I wanted to understand first, I know you are very bullish about the strategies you want to implement. Definitely they are working, but I'm curious as well because I'm sure you just want to see that number go down. What are these sectors that are still teething?
So there are a number of sectors, and thank you for appreciating the work that has been done. There's a good the trajectory is headed to the right direction. Yeah, but we are not there yet. We've given an outlook of 14 to 16. Okay, that's the outlook we've given. Okay, we are at 18.7, so still some work with 6 months to go, because that was half year results. So still quite a bit of work to do.
I can see that. Yeah.
Manufacturing was definitely a big sector that has never quite recovered since COVID. You speak to Kenya Association of Manufacturers, they'll tell you there's been a lot of COVID happened and the shilling happened. It affects the manufacturers. When the shilling depreciated all the way up to 160 something. Yeah. So they will need some fundamental structural changes and support from government for it to come back. Yeah. That said, we are seeing some new pockets. And when you get customers who are borrowing for machinery, as opposed to customers who are borrowing for stock, it tells a different story. If I'm borrowing for machinery, I'm either expanding, and when you're expanding, it means your strategies are doing well, your demand is there, so that's why you're expanding, or you're a new entrant into a particular part of that market, which is always a good sign for the economy. So we are starting to see a number of those. We are also seeing guys coming in, new companies coming in and buying off, especially in the steel industry, buying off a number of steel companies that were not performing. Right? Then we had put them under receivership or shut them down. So new guys coming from outside and saying we are good with steel, we want to buy this asset. So that's very, very encouraging. Yeah. Infrastructure, the big issue was pending bills. Yeah. You've done a road, you've spent your money, you borrowed from the bank. 2 years down the line, you have not been paid. You have put in your house as collateral, it's been auctioned. All your other assets have gone because you've not been paid. Yeah. So that's why this securitization of a portion of the fuel levy, I think, is very helpful to the economy. Okay. definitely goes a long way in unlocking the money to pay these guys. So part of that money they are being paid, service your loans, use part of it to service your loans, use the other part to start working.
Okay.
Yeah.
Okay.
So it's not everything that is going to come to us because then, you pay us and then the guy goes.
Okay.
You also need to start working because when you start working, you're employing people.
Absolutely.
There's a massive ecosystem around road contractors.
Absolutely.
Yeah. That helps the economy.
Yeah.
Yeah. So that we will see. That's why we're very hopeful that by the end of the year, you'll see those sectors starting to improve.
Okay. Excellent. Excellent. Let's also talk about your Forex and treasury. And I noticed the FX income under pressure. 6 months ago, you were quite bullish on treasury gains, saying that your team could seize opportunities even with a stable shilling. And now we have seen what you have done on your H1, a little bit down. So what happened and how are you planning on this particular sector?
Yeah. You've been kind by saying a little bit down. It's actually down. It's 48%.
Okay, there you go.
It's a 48% year-on-year drop, so it's a significant drop. So there's no way we will recover on that line for the remaining part of the year. So we are looking for other revenue sources, to support that. One of them is secondary trading. Now with the yield curve coming down, the secondary market for bonds is vibrant. So being able to take opportunistic sales and get some good income out of that. That's a line that will cover. The margins are low because it's stable. The volumes are also low. So the margins can be low and then you crank up the volumes and you try and offset. But when both of them are low, recovery is not in sight. So we'll have to think carefully, how do we plan for 2026?
I'm curious on this, still on the FX income exposure. Would you say probably there's an over-reliance on one or two currencies probably that probably has done this?
Yeah, I mean, this market is largely dollar, to be honest. Some euro and GBP that come through, but the bulk of it is you've got the dominance of the dollar in the global economy. That's why you're seeing a lot of things happening globally on that.
So your mid strategy so far, and just to check, and I think you mentioned, yes, you feel like you're on track, yes, based on the results for the year, but overall strategy, what are you doing? Are you rethinking some of the things that you're doing? What's informing you? Definitely, there must be those kind of areas. But I'm curious to know what's probably one thing that you would say that this one we are really checking overall to ensure that we're still on track on strategy.
Yeah, so I mean, when you have a 3-year strategy, you sort of prioritize what are you going to do each year. There are some things that have lagged. I would say maybe overestimated, or shall I say underestimated the amount of work needed to unlock them. We are really pushing to get those sorted out this year. And a lot of them center on the customer. So just making the customer's journey and experience with us easier and more pleasurable. The worst, most customers don't want to be told, come to the branch to bring a copy of your ID. Or I don't know, come and... it's you want to help them self-serve. Let them take the decision whether they want to come to the branch or not. There are those who do. You go up country,
they want to see who tells you my money.
The day you funga this branch, us guys are moving. Me, I have to see a branch here. It's part of my routine.
Legacy client.
It's part of my routine. I've got to go to the bank. And the bank is brick and mortar. It's not my phone.
Which is good for them. It's also healthy.
Exactly. So there are those. So we are fast tracking a lot of the initiatives and projects that will just make that customer experience a lot more pleasurable. Make sure that our systems are a lot more stable. They are not tweaking. And I keep saying, we are compared with because of democratization of technology. Someone, you open your phone and you go to Instagram, it opens instantly.
Absolutely.
And you're able to do your stuff. You go to my app, you press it and it starts buffering. You're wondering, this guy is just here.
You'll be out before
In fact, I've just passed their offices. It's buffering. This is the Instagram guys are where and it's working.
Yeah.
So that's the comparison now.
Okay.
Yeah. So I would say largely second half of the year, there's a lot of work to be done. A lot of work. It's not going to be as easier. It'll be harder than the first half.
Okay.
But we are on track to delivery.
All right. So as we near a close of this, I could tell the numbers are quite bullish when it comes to the digital lending and all that. But I thought to myself, looking at the NPLs when it comes to the digital science of things, ecosystem, the digital ecosystem, not just KCB, just the digital ecosystem. You can't even fathom the NPLs that we see there. And then you're here and you can see the numbers are growing, doing super well. And I wanted to know, what are your thoughts about the exposure to risk? Because now you're quite strong on the digital adoption, small ticket, high volumes lending model. It's working.
Yeah.
What are you thinking about?
No, we've been at this game for a long time.
Okay.
Oh, yes.
So
we burnt our fingers. The first digital lending product was 2016, I think, or 2015. Yeah. So almost 10 years experience of digital lending. We have lent and almost written off the entire book of what we've lent.
Okay.
So a lot of changes, a lot of learnings.
Yeah.
We're also using a lot of AI, to do credit scoring for us, give us behavioral, because that is the most important part. You can do the normal credit scoring of saying, I can see your M-Pesa, this is how your M-Pesa transactions are. So you look like someone I can give a limit of 20,000.
Yeah.
But that's just, the textbook. Your behavior, once you borrow, is what is important more important for scoring.
Okay.
Because there are those who borrow a 30-day product and they pay in 2 days and borrow again.
Okay. That means
I know that is Mama Mboga, has gone to Marigiti, bought her fruits and vegetables, needed more money to stock up, borrowed, because you can even see the time they borrow.
Okay.
They stocked up, they've gone, they've sold, they've made their money, they've paid, because they want to borrow some more and increase their working capital. Yeah. Great. So you can keep, this is a good risk bucket to lend to.
Okay.
There are those ones who borrow at 3 a.m. on a Friday night. They will pay you in 2 weeks. And even that, they will pay half. So, these ones, this is sherehe.
Yes.
So this one you need to be careful about. Yeah.
Yeah.
Yes.
I like the context. This is good. You must give your final word to shareholders. They're watching.
Well, for starters, thank you for sticking with us even when we paid dividends that were not up to your liking. The decisions we make on such things for the future of the organization. I would not want to put the bank at risk because of short-term decisions. So I've got to look at the bigger picture, the longer term, and enjoy your 4 shillings per share. Thank you.
Lawrence, thank you so much for your time.
Asante sana. Thank you.
There you have it, Lawrence Kimathi, the Group CFO, KCB, and quite optimistic and has dug deeper to explain to us the digits. I appreciate your time. I'll leave you now with the markets. See you next time.